Things may have gotten a little tougher for the head of the Federal Reserve after confirmation today that consumers aren't spending as much as expected. Retail sales for June fell a seasonally adjusted 0.3%, well below expectations of a rise. Because consumer spending makes up a good chunk of economic activity, if that piece of the economic puzzle is missing, some say it throws into question a potential September rate hike by the Federal Reserve. And the batch of bad news comes just one day before Fed Chair Janet Yellen is set to appear before Congress. Courtney Reagan reports.
According to the latest government data, consumers aren't spending enough to prop up economic growth. June retail sales posted the weakest reading in 4 months, and that's not all the bad news. May retail sales were revised lower than previously reported. With consumer spending fueling 70% of the country's economic growth, monthly retail sales are a key data point for those trying to forecast the Federal Reserve's decisions on interest rates. And Fed Chair Janet Yellen addresses Congress in a 2-day testimony beginning tomorrow.
Just look at the retail sales numbers, look around the world, and tell me that you feel fully confident that we've turned the corner and we ought to raise rates. I just don't think it's there.
It's hard to find bright spots in the data. Spending at service stations was up, but just slightly, reflecting the rise in gas prices. The electronics and appliances category saw sales gain 1% as more consumers divert discretionary spending toward gadgets and investing in their homes rather than on apparel and accessories. But the rest of retail sales results are just so-so, showing consumers continue to carefully allocate their hard-earned cash.
I cut back mostly on non-essentials like clothing, bicycles, things like that.
Less on like travel, shopping, but we're still spending on like necessary goods like food.
And many economists think the cautious consumer is here to stay.
Consumers are not going to go back to the old days. And what's embodied in the Fed's forecast is things are about to get back to normal. That now that house prices are going back up, the stock market is high, we're going to have a wealth effect, consumer spending is going to go back to the go-go days. I don't think they ever are. And so I think we're in this perennial waiting for Godot that the consumer is going to come back and start leading us back to some V-shaped recovery. And that's the part I think is wrong.
After today's retail sales results, economists began taking down their GDP forecast for the second quarter, which may not be a good sign for retailers going into the all-important second half of the year, with both back-to-school and holiday seasons ahead. For Nightly Business Report, I'm Courtney Reagan.